This is the Financial Freedom Pod. I'm Bruce Whitfield. Warren Ingram is a certified financial planner, and he's giving us micro steps to financial freedom. It's the only way, frankly, you're ever going to succeed to really change your mindset, change your thinking, and change your financial outcomes by doing things just one step at a time. Last time we chatted about exchange-traded funds. What about managed funds? These are the things you see advertised at airports and on billboards everywhere, where the smartest people in the world get together and debate and argue and plan and strategize and go out and very carefully select companies from the best in the world and put them together in funds and seek to have you buy into their best ideas. And it's terribly compelling, Warren.
I think it's very compelling, and you were very generous to them, calling them the smartest people in the world. I think they tell us that they're the smartest people in the world, and some of them are, and some of them definitely aren't. But most of these managed fund providers, the managed funds will have a few names around the world, depending on what market you're looking at. So, sometimes they're called mutual funds, sometimes they're called unit trusts, sometimes they're called UCITS funds. And what's happening there is the investors pool their money together. So you and I put our money together, and we can't go and create these pools of money on our own. So money gets allocated to something that's highly regulated, and that's a key point in these managed funds or mutual funds is assets are put together by investors, and that money is only owned by you and I. It's not owned by the company that's providing these things. So company ABC that creates a mutual fund, if that company goes bankrupt, you and I are not affected by our assets disappearing along with their own money. Those assets are ours because that money has been pooled and it's been used to buy a range of different investments on our behalf. And the company that's providing that, all that they've done is they've made the investment decisions for us, but they're not allowed to go and put that money in their own bank account or pay themselves bonuses with our money. That money is separate from them. And Bruce, this world is really big. You could own a managed fund or a mutual fund that just invests in cash, just invests in property, just invests in shares, or invests in a combination of all of those things together. So there is an enormous amount of choice available to you when you look at this this part of the investment world.
They're making decisions and they're having meetings and they've got big offices, and they therefore will have a higher cost base. Now, the big debate in the world is whether the cost base is worth it or not. How do we make that assessment?
So when you're making an investment decision, understanding those costs relative to other funds is very important. So if you buy a fund that costs you 0.75% a year, and there is a fund next door that seems to do the same job but costs you 3% a year, the likelihood is that the fund that costs you 0.75 is going to do better. So that's important. If you buy a fund, a managed fund that's trying to beat the S&P 500 index in America, 2 or 3 out of 10 will get that right over a long period of time, and they'll get it right by a big proportion, and they'll tell you their fees are justified, but the rest of them won't. And then the question is whether their fees are worthwhile. So costs are a big thing.
Okay, this needs graphs, this needs pictures, this needs a lot more explanation. Can I ask you to write some notes and to post them on brucewhitfield.com, and then the action this week would be?
Please go and read that hard bit of work that I've just put together for you.
Just one thing this week. Go to brucewhitfield.com. All about costs, and we'll help you one step at a time to your financial freedom.